Hello guys, so I wanted to do a short video on one of the reversal patterns called head and shoulder. This is a bearish reversal pattern. It always happens after a bullish rally. Once bears start coming back into the market. So I'll give you an example of using this chart here. You can see, as I've said in my previous videos, that an uptrend is clearly indicated by formation of a sequence of higher highs and higher lows, while a downtrend is formed by a sequence of lower highs and lower lows. So in this scenario, you can see prices push up, they form a higher high, then they form a higher low, form a higher high, higher low, higher high, higher low, higher high. You see? So in the case of a downtrend, you always see formations of lower low, lower high, lower low, lower high, lower low. Understood? So how you identify that a trend is changing? The the series of lows and highs comes and shifts. So like when a trend is reversing from bullish to bearish, it shifts from formations of sequences of higher highs and higher lows to formations of new lower highs and lower lows. So in this example, we see a higher high, higher low, higher high, higher low, higher high, higher low, higher high equal low. It's this low is equal to this low. Then formation of a lower high. Now there's a formation of a lower low. This is a confirmation that now our previous higher low has been breached to the downside, meaning that the direction has changed. So how does a head and shoulder pattern. How is a head and shoulder pattern formed? It's where the prices form a higher high, higher low, higher high, equal low, or almost equal low, then lower high, then the neckline is breached to form a new lower low. So this is an indication that prices reversing to resume its bearish rally. So let's see an example of a real-time market scenario. Remember that not all patterns look like this. Some are slanting, some are look almost exactly like this. Some will break the neckline and won't retest. Some will retest the neckline. So for conservative traders, you always wait for a scenario like this one where prices will break the neckline to the downside, push slightly lower, then retrace slowly, reject the neckline, then push downwards. Another thing with our head and shoulder pattern, how do you target your TP, your target profit? You always measure the distance from the highest point of your pattern, that is the head, to the neckline. That is the same distance you will target after retest to the take profit. You see an example of this one. This distance, measure distance between the head and the neckline. Same distance is the distance that you will project after the breach of the neckline or after the retest of the neckline. That is the same distance you always target to take your profits at. Remember, every pattern has a defined way of exit, and you should have a defined way of entry and exit for every pattern so that you can establish repeatability in your trades. So let's look at a live real-time scenario. You can see an example of this one. This is a real-time chart. Euro, Australian dollars. I don't know when it was, but you can see it formed. This is our low. This is our high. This is our low. Then forms higher, high, higher low, higher high, higher low, higher high, higher low, higher high equal low, lower high, then the neckline is breached. Once the neckline is breached, so there's one scenario where you can enter this trade. Once you notice that it formed a higher high, then a higher low, then a higher high, then an equal low. This is first scenario whereby you can speculate that it will be forming a, a head and shoulder. So you'll be looking for entrance at around this place for the first entry of short. Second scenario is where you wait for this pattern to complete. Then once it's complete, it's always complete once the neckline is breached. For an aggressive trader, you can execute a trade here, but then your stop loss will be all the way up here. Then for conservative traders, you wait for prices to push down for a while, then retest the neckline, then continue pushing down. So you'll always wait for an entrance once the retest is happening before price continues to push down. Here's an example of the opposite of what I was explaining, an inverse head and shoulder. You can see after price breached all the way, it pushed up, then came to retrace to retest the neckline, then continued pushing up. So these are good examples. You can see an example of this one where price formed a higher low, high high, higher low, higher high, almost equal low or higher low, then lower high, then now lower low. So for a conservative trader, one will wait for the retest before the price pushes down. So let's look at an example in the current market. This is GBPNZD. So we can see these are this is our high, this is our low. Then we formed a high which is higher than this high. So this becomes our higher high. Then we form a low which is higher than this low. Okay, so this becomes our higher low. Then we form a high which is higher than this high. So it forms our another new higher high. Then we form a low which is almost equal to this low. So it's an almost equal low. Then we form a high. Okay, this one will label it as equal low. Okay, then we form a new high which is lower than this high. So this is our lower high. Then price pushed below our equal low to the downside. So it has now formed. We have now formed a new lower low because it's lower than this low. Now we have a new lower low. This is a confirmation that the price movement has changed from bullish to bearish, because you can see here the series of higher highs, higher highs, higher highs, higher highs. Now prices have shifted to formation of series of lower highs and lower lows. So you'll be expecting a formation of a lower high around the neckline. Okay. So remember, prices it won't happen like I've shown you in these charts like this perfectly. There are scenarios where might come, retest there, then show signs of rejection. You might consider taking a position there. There are some scenarios where it will come, breach inside a little bit, and maybe come reject this descending trend line. And then once it shows signs of rejection, you might also consider executing a short position. So this is one of the outlooks that I'll be looking within the week. Yeah, today's on Tuesday morning. Yeah, so this will be one of the pairs that I'll be looking to execute a short position within the week or maybe next week, considering how fast the price moves to these regions. And also remember that this is just an idea. Prices never always behave like they've behaved in the past. So manage your risks. Yeah, cheers.